One of the most common questions that I've been hearing recently is, where do I invest my money? Everything is so overvalued. You look at real estate and home prices are sky high and mortgage rates are even higher, making it so expensive to invest in real estate, and it doesn't seem like a very attractive investment right now. You look at the stock market and multiples are still so high, which makes it not that attractive of an investment. I look at potentially buying a business, and again, multiples are so high, making it less attractive of an investment. So if I have cash put aside, what should I be doing with this cash? That way I can actually get some return or get a good investment on my cash. And this is where the first thing you have to understand is, what are your options? Because although we are in an overly inflated market right now, there are different things that you can do with your money that can help you at least generate some return on your money. And this is where you have to understand what your options are. Now, of course, I am not a licensed financial advisor. If you have questions, talk to an advisor in your area. I don't recommend what I do to anybody else. And I'm just a random guy on YouTube. With that, let's jump in. And the first thing I would say is, if you have cash sitting in a savings account, and I've talked about this before, at the very least, consider moving some of this cash to a high interest savings account. A high interest savings account is a regular savings account that'll pay you higher interest. Today, you have high interest savings accounts that are paying around 5% in interest. This is not a CD. Your money's not tied up. These banks are FDIC insured. They're regular banks that are online that'll pay you higher interest rates. So take a look at that and start earning at least 4 to 5% in interest on your cash. If you're not getting at least 4 to 5% in interest, start with that. The next question is, now, if you're looking for an investment and you feel it's overvalued, don't buy it, because you don't want to chase investments. I think the thing that holds a lot of people back from making good investment decisions is they invest emotionally rather than financially. And investing emotionally means, I'm looking at the valuations of things growing. I'm looking at people making money and I say, oh my God, I don't want to miss out on this opportunity. So now you start chasing. And by chasing, this means you see a stock rallying and now you buy in because everybody else is making money. You see everybody else investing in real estate, buying homes, so you want to go out and do it too. And this is where patience is one of the biggest factors that will determine how wealthy you will become. I talked about this a lot with real estate investors, because real estate investors today will say it doesn't make sense to buy a home or a rental property because home prices are so high. I might be able to get a 5, 6, or 7% return on this property if I bought it cash, but mortgage rates are higher. So I have to pay 8% on my mortgage to get a 7% return, in which it doesn't make sense. And that's correct. However, I also want you to remember that no market stays in one spot forever. Today, we are in a seller's market in the real estate industry. 10 years ago, we were in a buyer's market. It was a completely different market where every buyer had the upper hand. Today, the sellers have the upper hand. And what that means is, we could see the real estate market be difficult for buyers and investors, but that doesn't mean it's always going to be like this. So you want to not chase deals, but look for value add deals, especially if you're talking about something like real estate. There are still deals out there, but you're going to have to dig a little bit deeper. I like value add deals. Value add deals means I'm looking for properties that nobody else wants to buy. This might be a beat up property. This might be a distressed property, meaning it's vacant or mismanaged. Going in and taking over a property in a good location and being able to provide some value myself, putting in the additional work. That way I can increase the returns. Does it take more work and more risk? Yes, but that's a way for you to potentially find deals. However, I still agree it is very difficult to find those deals now because the inventory of deals available for sale is so low. It's the same thing in the stock market. Maybe this means now you have to look for distressed assets, distressed stocks that could create an opportunity for you. Now again, this takes more work, but if that's something you want to deploy, there's a way for you to find better deals over there. In addition to that, if you still can't find a good deal, you still can't find a good investment, you still feel that everything is overvalued, still, I want you to be smart. Do not go out and chase investments. This is where the question is, how can you generate some interest on your savings as you're waiting for a better investment opportunity to come? And what we've been seeing happen, particularly in the last week, is that treasury yields have been rising to some of their highest levels in more than 15 years. A treasury yield is the interest rate that you get for loaning your money to the government. This has historically been known as the risk-free return. So you can lend money to the government and get 4, 5, sometimes more than 5% in interest, and it's virtually guaranteed. And now you don't have to worry about the FDIC limits because now it's lending money to the government. So is there risk? Yeah, the risk is that the government completely collapses and you don't get your money back. But if the government doesn't collapse, you're going to get your money back and your interest. Now, when you lend money to the government, you can lend money in the form of treasury bills, treasury notes, treasury bonds. Treasury bills are short-term loans, treasury notes are medium-term loans, and treasury bonds are your long-term loans. And now what you do is you can literally lend money to the government and then you will get paid with interest over the course of whatever the period of your loan is. So if you're looking for a place to park some of your money, especially for those of you who have more money beyond FDIC limits and you're looking for places to park that cash, a treasury bill, a short-term treasury bill, it could be as short as a week or a year, you can park some of your cash here and earn some interest as you're waiting for a better investment opportunity. Because again, I'm going to say this again, do not chase an investment. We are in a tough environment right now. But the question is, would you rather overpay if you don't have a good investment, or would you rather be a little bit more patient and find a good investment opportunity? And that's where, if you're going to be waiting for a better investment opportunity, at least generate some interest as you're waiting. Now, high interest savings accounts offer that option. Treasury bills also offer another option. But then the question is, well, what if you don't want to be so involved with their investments? What are different ways that you can be investing your money? By the way, if you want to stay up to date on what's happening with things like treasury bills, with the economy, the stock market, the housing market, and everything in between, I have a free newsletter called Market Briefs, where every day my team is working to break down what's happening in the economy. You can read Market Briefs in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, I got the link to how you can join down in the description below. But this is where now I want you to think about, if you don't want to just wait to invest your money, what are the other alternatives? Because I have a couple of different investing strategies. And again, I don't recommend what I do to anybody else, but I'll tell you what I do. There's a couple of ways that I invest my money. One is through a passive method, one is through an active method. And by passive investing, I mean it is happening automatically. So for example, I have a system that every Wednesday, and I just picked Wednesday because it's in the middle of the week, but every Wednesday, cash leaves my checkings account and is automatically invested into the stock market, into my portfolio of ETFs. This happens whether the market's up or whether the market's down. It does not matter. This is a dollar cost averaging system where now I don't care what's going on in the markets. I don't really pay attention to the dollar cost averaging system. Every Wednesday, cash is just automatically invested. And now, whether the market's up or whether the market's down, I'm just buying. That way I can accumulate more shares. And for me, I want more cash flow. A lot of these are paying out dividends because cash flow funds the guac flow. So if you are in a place where you say, you know what, yeah, I want to invest some money into, say, a good investment, stocks, real estate, whatever it might be, but I also don't want to just keep sitting on all this cash. I want to start deploying it. Well, you don't have to invest all of your money at once. And an alternative way to do that is by just investing a little bit of money regularly, because, well, no one knows where the market's going to be tomorrow or next week or the week after that. We don't know what the Federal Reserve Bank is going to say. We don't know what's going to happen in China. We don't know what's going to happen in Russia. All these things impact our economy and the stock market because the stock market is so emotional. So if you want to have a passive system, well, now you can build a number, whatever you feel comfortable with. Maybe it's $100, maybe it's $1,000, maybe it's $10,000, whatever you're comfortable with a week or 2 weeks or every month. You just want a system where regularly some of your money is automatically, passively, and consistently being invested into the markets, because now it's about just keeping your money in the markets longer. Like what Warren Buffett says, time in the markets beats timing the market. So if you want to start investing your money and you think everything is overvalued, well, you could at least start with some sort of passive investing system. And there are ways for you to passively invest in real estate now with crowdfunding real estate on the internet. You can see some of the partners that I work with down in the description. I'm not going to go over that all right now. But with crowdfunding real estate, that gives you the opportunity to get exposure to real estate. And if you wanted to do a passive investing system where you invest every week or every 2 weeks or every month, you have that option as well. I personally prefer owning physical real estate, but this is an alternative option if that's something that you're interested in. So if you're looking for ways to invest your money, even though everything is overvalued, the very first thing I want you to do is not chase investments. Be patient. Number two, at least generate some interest on your money as you're waiting. At the very least, get a high interest savings account. Number three, if you're looking for good investment opportunities, look for distressed assets, whether it's distressed stocks, distressed real estate, maybe even distressed businesses, because you're going to see more and more with those. The fourth thing is you can also consider putting or parking some of your money into treasury bills or treasury bonds. That way you can generate some interest on your money while it's sitting there waiting. And then the fifth thing that you can do is you can consider passively investing your money if you want to start deploying your money. That way you don't have to wait to keep investing your money. But this is where, again, that financial education is so important, because everyone's investing strategy is going to be different. What works for you is not going to necessarily work for me. So you got to know the different investing strategies out there. You got to learn to be financially educated. You got to learn how to analyze investments. That way you can figure out a system of how you can build wealth based off of your goals and your risk tolerance and your investing interests, because what works for you might not work for me, and what works for me might not work for you, which is why I always say I don't recommend what I do to anybody else, because if you blindly copy what I do, well, you're probably going to lose. And that's where the financial education comes into play. And that's where a couple things. Number one, I want you to work to build that financial education and the preparedness right now, because, well, we have a lot of red flags in the economy. I did a whole breakdown of this in my investor summit. If you haven't watched that yet, I'll link it for you down in the description. And this is for number two. 2023 is not the year for you to finance a new truck. This is the year for you to get financially smart. That way you can work to build that financial education. That way, as more opportunities present themselves, you'll be ready to pounce on those opportunities.